Oonagh and Sid and Jim, it's I'd like for you to all introduce yourselves a little bit personally, who you are, what you do, what drives you, what motivates you to make a difference today. And as Sigdam said, let's talk about 2023 a little bit. What are some of the challenges that we've seen today with global growth, global businesses, global technology, some of the regulatory environments that we have to worry about, and then what you see the opportunities that exist, and how can the audience here get a better understanding of what's happening in emerging nations and take advantage of what they need to study in and to look for investment opportunities, whether it's through us, through somebody else, but let's give them a feeling of that. I did notice, guys, the audience, thank you very much for bearing with us and staying here. I know there's a bunch of chats that I haven't read because I couldn't, but there is a Q&A tab at the bottom of your screen, and that is the best space to put your questions. It's question and answers. If you put your question in that, then we know that we have to answer it. So please do that. I'll take myself off screen. Sigdam, thank you so much for joining us, and I'll let Sid, Oonagh, and Jim take it away from here.
Thank you so much.
Thank you very much, guys. So Jim, would you like to start quickly and just introduce yourself?
Sure, happy to. So I'm Jim Chu, CHU, and I'm the CEO of Untapped Global, and we invest in emerging markets, in particular Africa. Personally, I've been investing in Africa for a while. I have over 100 companies in my portfolio, almost half of those directly and the rest through local funds. And I'm very bullish about emerging markets and the innovation that's emerging out of these really fast growing markets, number one, but the requirements and the things that entrepreneurs are building there are quite different than what we see in developed markets. And I find that very exciting. And part of that is the potential things such as Web3 and what it can do in those emerging markets. So it's a short intro for myself, and I'm sure we have a lot of questions and discussion points to touch on later.
Absolutely. And Sid, do you want to go ahead?
Yeah, sure. My name is Sid Mofya. I am an investor with the Draper Venture Network. We're an alliance of venture capital funds around the world. We've always believed in the promise of emerging markets, and our belief from when this organization was formed 30 years ago was that venture capital was going to be everywhere, which is pretty much true now. And there's still a long way to go to get the benefits of venture capital to everybody, but we're definitely still on that mission. I'm originally from Zambia, so I very much resonate with the needs of emerging markets, and have friends and family there and visit frequently. So it's a topic of personal interest to me.
Wonderful. And this is where I kind of make everybody bored by saying I'm a compliance officer. And that's not exciting to anyone. But no, I've been in the industry now in financial services for over 22 years. And I think one of my biggest passions is simplifying the understanding of financial products so that we can more people can have access to the financial system. And I suppose that's very pertinent to our discussion today. We're going to talk about breaking down borders, in particular, looking at crypto expansion and in Africa. And I think it's just as a starting point, education has been one of the key factors. One of the things that we have seen previously is many people have been financially marginalized in Africa through a lack of education about products, access to the financial system because of de-risking. And of course, in the crypto space and the fintech space, we have the opportunity to remove those barriers to entry and offer financial services to a much wider group in the population. But with that, obviously, brings a lot of responsibility in terms of education, supporting users. And I suppose just kicking things off today. So it's Jim, obviously you've been looking at the take up of crypto across the African continent over the past few years and been involved in a number of projects yourself. What are your thoughts around why crypto take up has happened so quickly in Africa in comparison to other geographical locations?
Well, I think it's important to keep in mind that the use of crypto or use of Web3, use of blockchain technology in general, is very differently applied in emerging markets than what we often associate crypto with, right? When you mention crypto, you immediately have images, most people in the US at least have images of accidental millionaires or billionaires with their yachts. And there's this speculative trading aspect to crypto that's very prevalent in developing markets. But in emerging markets, I think there's a very different potential role for crypto and blockchain in particular. How do you improve identity verification? How do you improve the management of cross-border transactions and cross-border payments? It becomes a very utilitarian function versus, I think, obviously it could be utilitarian in developed markets as well, but because there's already much infrastructure in place in developed markets, there's, I guess, less of a need. And so what role crypto / Web3 blockchain can play in emerging markets is quite significant because of the lack of efficient technology and financial infrastructure in emerging markets.
Absolutely. And so do you want to pick up on the back of that? What about you? What have you seen from your perspective?
Yeah, and I'd just like to add to Jim's point about the utility of crypto or blockchain technologies. One of the big problems that we face in Africa is that the borders have been drawn and communities have organized around those borders for better or for worse. The historical how that came about historically is a story for another day, but that's the reality that we're in. And that reality means that it's harder to do trade between Tanzania and Zambia than it is to do trade between Tanzania and the United Kingdom, which is ludicrous to me. So when I lived in Dar es Salaam, one of the things that really annoyed me was to go into a supermarket and find bottles of mango that were bottled in Belgium. When if you spend any time anywhere in sub-Saharan Africa, around about this time of the year, it's flooding mangoes. There's really no reason that should be happening, but that's not for lack of people being ingenious. It's because the infrastructure just makes it easier for somebody to import that mango from Belgium so they can put it in a supermarket than for them to be able to get the talent or the resources from another country that's just next door. So that's just one of the things that I feel, if we do it right, that blockchain can help bridge that gap much quicker than we could trying to do it the slow way, which we have been trying for many years.
Yeah, and you could say as well, Sid, that some of these issues are legacy. They're issues that, it's just obstacles, or should I say opposition to change. And I think that's one of the great things as well that we're beginning to see now in the Web3 space and the crypto space, and with blockchain technology. We're beginning to see an evolution of financial services offering and the usage of blockchain technology in other ways that are going to fundamentally change the way in which we operate going forward. And innovation is going to be key here. What I've been really excited about is, again, from my perspective, being in the regulatory space, is watching the regulatory evolution. And I've been closely looking at Nigeria, Ghana, South Africa, which have been 3 countries with the fastest take up in crypto in the African continent. And what was really interesting is, whilst it's the fastest growing continent globally, it has the lowest number of volumes. And statistically, when we say smallest transactions, month on month, we were seeing around $20 billion per month in 2021, which doesn't sound that small, but in comparison globally, it is smaller. So one of the questions I have here, Jim, is looking at companies moving into Africa and obviously companies looking to expand. We've also seen recently that some entities have been hit by the crypto winter. There has been one entity this week which has had to lay off staff because of exposure to FTX. Another company having to lay off staff due to just the downturn in the market and lower transaction volumes. What are we going to see then moving forward, given the opportunities that exist? And again, crypto winter is an opportunity for innovation. What do you think, Jim, we should be looking at in respect of companies moving into the African continent to take hold and take the opportunities that are available at the moment?
Yeah, I want to answer that question, but also go back to Sid's point and a bit of what you're talking about in terms of opportunities. I think Sid, you talked about the story with the mangoes, and you asked, well, why is that the case? I mean, there's loads of reasons. We can probably spend 3 hours talking about why, but one of the key reasons in my mind, and really one of the problems that we're trying to fix with Untapped and using digital technology, which includes Web3, but is not exclusive to Web3, is the ability to change how companies, individuals, especially small businesses, access finance. The finance world is even in developed markets quite broken in the sense that it really serves those who are already in the have, if you will, right? It's easy to borrow money if you already have money. It's easy to get investment if you already have the right networks. But what we see in Africa is that there is a huge divide, which exists in developed markets, but is much more apparent in developing markets between the haves and the have-nots. Right? There's a 2-3% of the population of the businesses that are formal, large, they have the capital, they can walk into any bank and get as much money as they want. Then there's the 97% of the population that have thriving, fast-growing, cash flow generative business, and that can't for the life of them get a loan. Now, why is that? There are some legitimate reasons that's the case, but this is where technology can come in and fix that problem. Things like blockchain to create greater transparency and accountability at scale down to a small business level. And by doing so, provide the information to allow global financial systems to finance them. And that really changes the system so that, hey, even if you're not already in the network, in the know, in the have, you can still access capital to grow your business. So now, if you're looking to process some mangoes, to Sid's example, and you just need some machines, you might be able to do that because there's a more transparent digital financial system in place. So I personally think that is the biggest opportunity, not just with Web3 and crypto per se, but rather the whole digital transformation that's occurring in emerging markets that can be very effectively connected to the Web3 financial system as well.
Who knew we would talk so much about mangoes today?
We all love mangoes. That's a minute.
More people are just dialing in now just to talk about mangoes.
I guess I'm missing home. That's what it is.
So just talking about that, one of the things as well I'm keeping a close eye on as well is with regards to kind of central bank digital currency as well. And Sid, we've seen a big push, especially in Ghana and Nigeria, over the past few weeks. In fact, there was a lack of take-up in the CDBC that was issued by the central bank, and now they're looking at new ways in which that potentially could be more attractive to investors. And again, with the Belt Road Initiative coming over from China and China being very much behind their own CDBC, you can see the opportunities from a trade perspective here for that to really take off. Do you think a retail CDBC is going to be as successful versus crypto, or do you think that going forward the future is in crypto transactions as opposed to central bank digital currencies?
Gosh, that's a hard question. So for people that want to invest in currency-like instruments in Africa, it's easy to invest in treasury bonds and you get a very high yield without the risk. So I guess TBD, if the digital currency can come with the same kind of risk characteristics, then it would be a really good instrument. Yeah, so I don't know the answer, but yeah, I think the government treasury bills are so attractive that it's hard for something else to come up that if it's more volatile or carries a higher risk or a lower return.
Yeah.
So TBD, I think, in my view. I don't know if Jim has a different view.
Uh, well, gosh, I think it is TBD. I mean, I think there's a lot to be seen in terms of not only the actions of the central banks in sub-Saharan Africa and Africa, other emerging markets, but also how the market's going to react. And as many of you probably know, there's quite a bit of day-to-day take-up of crypto in some of these markets. You know, they're crypto vending machines, or not vending machines, ATM machines in many of these markets. That's not to say, though, that it will replace national currencies. I think we're still a ways from that. All that said, I think if crypto or things such as Ripple can be a more effective mode of transfer than your usual SWIFT or other systems, there's a huge, very, very inefficient banking sector, money transfer sector to be disrupted. People are already doing that. And so I expect to see a lot more innovation there. And I guess the reason I'm bringing that up in relation to your question, Oonagh, is I think that will ultimately drive, to a great extent, behavior and reaction of central banks. Because if you have a lot of money moving from country to country through crypto, that changes monetary policy. That changes the ability of central banks to manage their own currencies. So that will force a reaction in many ways. Exactly what will happen? Gosh, I wish I knew. But I do think that there's going to be a lot of disruption happening once transfers start happening more and more through Ripple, as an example.
Yeah, absolutely. And we have seen in the past few months, thankfully, an increase in cross-border remittances as well, in terms of money coming into Africa, which we had seen a lack of happening during COVID. So there is positive movements. And also, I think it's worth noting that if we go back to the likes of 2013, there was one crypto ATM in Singapore. 2014, there was none, because the regulator discovered there was one. But now, as today, there's multiple ATMs. So, as you've mentioned there already, Jim, there are multiple, Bitcoin ATMs available in the African continent. And, we're going to see the growth happening in the market similar to other countries. The most important thing, however, is that we ensure there is consumer protection, that there is education. And I think one of the key things that we're seeing around the globe is ensuring that there's capital adequacy in terms of firms that are, I wouldn't say so much wallet and exchange providers, but anybody who's providing any type of credit facilities or leveraging facilities or derivative products in this space. We need to see appropriate capital adequacy in place in those institutions. And that's going to be the fundamental focus of regulators over the next 18 to 24 months. So Sid, just kind of over to you then, in terms of kind of what we expect to see next in the market. What are your thoughts?
I think we'll probably see more companies embracing Web3 first technologies and basically creating, I guess, new financial paradigms. My hope is that like over the last 10 years, we've seen just growth of the startup entrepreneur type of person, and I distinguish that from the small business owner, which is everybody else pretty much. But the startup entrepreneur is looking for a new way of doing things, whereas the small business entrepreneur tends to be taking an opportunity that exists and exploiting that. And both are critical to the growth of the economies. I think, well, my hope is that the way the mobile revolution transformed the economies very, very quickly in Africa, and the way people did business is the way that that Web3 can transform businesses, because we're able to transact across borders. I grew up very close to the Congo border in Zambia, and in order to do trade between where I lived and 45 minutes drive away, there was all this friction, and crypto just creates the opportunity to remove those frictions, and my hope is that entrepreneurs will step into that, and we're already starting to see that.
Absolutely. And Jim, your thoughts as well, especially around the kind of, you've mentioned your investment in Africa as well, but entrepreneurial opportunities, innovation. What are your thoughts on next steps?
Well, my apologies in advance for talking perhaps too much about what we do at Untapped Global, but going back to what Sid was saying, we have obviously, we all know about tech startups, and I've spent a lot of my years investing in tech startups around the world, but in particular in Africa. But I do think one of the biggest opportunities really is figuring out how to actually finance those other type of small business that Sid you mentioned. Right, we look at the financing markets. Yes, okay, more and more venture is going into Africa, and it's one of the only areas, in fact, that's still growing in terms of venture capital in the last couple of quarters, sub-Saharan Africa in particular. But I think one of the areas that is, in my opinion, and this is after a number of years of investing in Africa, I think the biggest untapped opportunity is figuring out how to finance all the other businesses out there. The small businesses that need CapEx to grow, the small businesses that need working capital to grow. There is no financing instrument available in the marketplace today to finance those type of businesses. It's interesting, we're here in the US, and the Fed increases the Fed rate by a couple or 3/4 of a point, and everybody freaks out. Oh my goodness, recession. Imagine the inverse. These are completely capital starved markets. If you're able to provide even a tiny bit of credit, imagine how much can grow. And I think that's really the opportunity. And where Web3 comes into that, and again, just talking about what we do, is there's an opportunity with this digital transformation to start financing those types of traditional businesses and their capital growth and their business growth using the data and the technology that can flow through the digital payment systems and the data systems that all these companies and all these assets are starting to have. And you can even connect them to Web3 payments and Web3 investments. So you can imagine a cryptocurrency that is not just speculative, actually connected to real world value and real world economic generation. I think that's the innovation that is most likely to come out of emerging markets. Because why? Because the need is there. Now in the US, you really, really want to get a loan, generally speaking, you can get one. Yeah. In Kenya, in South Africa, you could be the most successful small business. If you're the wrong size, forget it.
I remember speaking to you before, Jim, and one of the statistics that blew me away that you mentioned was, where there, as you've mentioned today, there is a gap in lending in the market. And for example, if an Uber driver wants to buy a car, he will have to pay 100% markup on that credit facility for a repayment, which means he will be perpetually in debt. And I think that the work in particular that I know that you're doing it's just phenomenal. It really is bringing opportunities and lifestyle changes and opportunities to the previously unbanked, and it's creating opportunities because people want they want to be able to develop themselves. They want there's always this discussion of if you give a goat to a farmer or you give them money, what do they want? That basically people want to be able to create their own livelihoods. And I love the work that you're doing, Jim. It really does make a difference to so many people. So really well done.
No, thank you for saying that. We hope to do a lot more, and we hope to do it with the Web3 technologies and with a lot of partners.
Brilliant. Okay. So
anyway, I'm obviously clearly excited. I think that's really the most exciting prospect, digital transformation and what it can do for the marketplace, not just through us, but through anyone.
I'm curious, Jim, and just for the benefit of, I guess, everybody else who's here, who's thinking, well, you're doing most of or all of your investments in Africa. What's the big why, and maybe a little bit of the story that led you to that?
Yeah, I don't think the why is that that mysterious, right? I started investing in emerging markets. I started investing in several African markets, and I was really blown away by the quality of the entrepreneurs and really how transformative many of the businesses were, right? In the US, especially at the angel level, or even at the small VC fund level, you're investing in companies that, great, let's increase CTR for selling crap to teenagers on the internet. Woohoo, wonderful, life-changing. And then you go to Africa and, there's some cultural stuff going on here because you talk to the American entrepreneur and you feel like your whole world will change, even though they're just selling crap to teenagers on the internet and increasing CTR to do that. And then you talk to an African entrepreneur and you talk to him for a while and you're like, wait, I'm sorry, I didn't really understand. So you're changing the future of food? Is that what you're doing? And they're like, yeah, I guess we're doing that. And that's when you go, whoa, hold on here. We're doing a completely different thing. Now, I think obviously that kind of technology exists in developed markets, but oftentimes, especially in the scale that we are at today with the schools and the SoftBanks of the world, a lot of the really, truly transformative businesses get snapped up for $100 billion valuations before they even have a product. And at the same time, I'm seeing companies that are cash flow positive, profitable, with single-digit valuations, and with truly transformative businesses. So the why for me is, look, I think so many of the 0 to 1 businesses are going to come out of emerging markets, going to come out of these left field markets that we don't know about over the course of maybe not the next 5 years, but certainly in the next 10 and 20 years, certainly in the next 30 years. So I'm in it for the long haul. And I think Africa is one of the crucibles of innovation that will explode in the next 2 or 3 decades.
Awesome, thank you.
Can I make one other note? Because I'm sure many of you, especially many of you who are familiar with Africa, oh yes, we've heard this before. Yeah, it's Africa's Day, and what's different now? Well, what's different now really is this digital transformation. Right? The way I see it, or the way I put it, is the whole world is going towards a digital peer-to-peer decentralized economy. Well, guess what? Many emerging market economies, Africa in particular, they're moving from a analog peer-to-peer marketplace almost directly to a digital peer-to-peer marketplace, bypassing the centralized phase in development history, right? In the last few hundred years, it's been centralized, the theory of the firm. Why do we even have a company? Why are corporations even there? Why do we have centralized governments, and why do we wield so much power? So much of that is really from the last few hundred years that, hey, centralized economies and systems do function more efficiently. What we're seeing now is, hey, you know what? Decentralized systems actually are more efficient if you can coordinate their activity in an efficient way, which is what digital platforms do. And so by nature, African economies are able to go from analog peer-to-peer directly to digital peer-to-peer in a much more efficient way. And I think that's where the big upside efficiency, economic efficiency can be found. I'll stop talking because I'm sure I've already talked too much, but I'm personally quite excited about that, and that's really my why.
Wonderful, and rightly so. Oonagh, I was going to ask. I think the transition needs to kind of go hand in hand. So that, Jim was talking about going from analog peer-to-peer to digital peer-to-peer, and in between that is the whole regulatory environment and how that facilitates that shift. I'm curious from what you're seeing, if there's some bright spots that you think are tackling it the right way, maybe not being too heavy-handed, but also not being too so lax that you have big disasters. Just any insights that you're seeing from there.
Yeah, well, we've seen a lot of variations globally in how crypto regulation has been formulated. And to be fair to regulators, in many instances, they themselves are grappling and getting to grips with understanding the product itself. And the product isn't singular. It continually creates derivative products within itself. So we've seen regulators and regulation evolving slowly across the globe. And the best example of regulation we have at the moment, and I think you, Jim, and I discussed this just yesterday, was with regards to UAE and Bahrain. Both of them have taken the token use case and broken that down into to categorize them into the categories, which means that we can look at better ways for investor protection, similar to what we saw back in 2007 with the introduction of MiFID, the Market and Financial Instruments Directive in Europe. It looked at investor protection by designating products within categories for the investor's ability to handle financial risk. And we're beginning to see that happening now in the crypto space, where tokens are being dropped within their, their use case, which is fantastic. So that is one of the key things we're hoping to see in emerging markets from a regulatory perspective being taken on board. Other regulators around the globe are playing catch up. UAE and Bahrain are, to be fair, the example of the benchmark of where we want to be at the moment. But again, they themselves will tell you there's a lot of work to be done moving forward. One of the great things that we're seeing, however, is public-private participation in discussions. We're seeing the engineers. We're seeing previously we had a lot of compliance people and legal people around the table formulating regulation. That doesn't work. We need the engineers, we need the developers around the table, looking at the way in which the product functions, looking at the risks and the use case within the products, and how regulation could be formulated to protect investors, because that's really what regulation is. I think a lot of people forget that. Regulation wouldn't exist if we could manage the risks ourselves. Regulation exists to protect the consumer, to protect the market. And so obviously regulators are looking at that first and foremost for protectionism purposes. But secondly, as we've seen over the past, I'd say in particular the past 12 months, entering in the crypto winter, also with some of the exchanges that have been hit by various issues that have happened, there is a level of protection that needs to be afforded to investors, less sophisticated investors, where emerging markets is a perfect example. And again, that's not just to do with the African continent, but LATAM is a perfect example as well of where we're seeing a significant growth and uptake in use cases of crypto to combat both political instability and inflation. And it's wonderful, it's great. But we also need that to be coupled with the right regulation so that the market players are operating in the right way, that they have appropriate capital to cover issues such as we saw with FTX. You shouldn't be dipping into customer funds. that's a 101 of banking segregation of client assets. It's pretty clear. You don't use client assets to cover your own positions. End of story. So these types of issues, which should be perfect, they're perfectly simple and they're perfectly logical. But again, we're having people coming into the crypto space who have never worked in banking before. They've never worked within financial institutions. That's wonderful because innovation is happening. But on the other hand, we need to understand the protections that need to be afforded to protect the consumer. So there's a really important opportunity right now for public-private partnerships, for people building the products to work with regulators, to work with financial institutions to really develop the right framework to support the infrastructure around building out the products. And again, when we talk about Web3, and again, today we focus primarily on crypto, what we're building here, people always say to me, a crypto firm is a fintech. I said, no, it's not. You're building a community. People are investing in products. They're investing in tokens because of their beliefs. This is going to be a completely different concept. We're building out an entire virtual ecosystem of multiple offerings, NFTs, tokens, you name it. We're at the tip of the iceberg in terms of innovation. So the importance of regulation right now is we're not going to be able to keep up to speed with innovation because it's going to happen so quickly, but we just have to be sensible. And we also as well need people to kind of think, I always say to myself, what would my grandmother or what would a person on the street, if I told them the risk, what would they expect to see? And that's how simple compliance is at its core. What we need to avoid is over-complexualizing it. And what I'm really scared is that the cost of compliance is going to significantly increase in crypto firms and other Web3 entities. It doesn't need to. Compliance will be a cost to ensure that you're managing risk, but it doesn't need to be over-engineered. At its core, it's simple, as I've mentioned already. So we need simplicity and we need common sense. And we're really beginning to see that globally. And that excites me. That's a completely different approach than we've seen previously in regulatory development. And I really hope this continues. Sorry that my speaker just did like a mic drop noise. There you go. I'm out. Done. We can go back to mangoes now.
No, thank you for that. I mean, it's super important, and I'm glad that there's people in the world that are like you that are excited about this, because you know, there's other people that are just running. You know, let's just do. But it's certainly very, very important. How much more time do we have? Like 5 minutes or so?
How much time do you need?
No, I was wondering if we should open it up to for questions.
Actually, we have opened it up for questions, but
cool.
we have a question for you, Jim. It's in the Q&A.
Let's see. I don't see it. It's the Q&A. Let me pull it up. Sorry. Apologies.
Read it to you, or you can see it.
Yeah, I can see it now. Yes, thank you. So let me just read it for everyone's benefits. Jim, do you think your approach to investment in Africa to include these entrepreneurs who are benefiting from the longstanding micro enterprise micro loan support projects, or the NGO World Bank or other micro entity loan projects? Do you link your approach? Yeah, so link is perhaps the wrong way I would describe it. I would say what we do is complement it. You know, if you look at what microfinance and the very large and fairly well-established sector of microfinance, and what they focus on is they're looking at fairly small loans, and their way of quote unquote underwriting is very different. In fact, they don't really underwrite at those small scales. They use those small loans to, if you will, suss out who are their usual clients or best clients. So as I joke, you can borrow $500 to buy a cow, or borrow 10 million to build a power plant, and everything else in between you can't do, right? Because microfinance will give you a $500 loan. The problem is when you want to get a $5,000 loan, even if you've gotten the $500 loan, it becomes more like the typical bank process. All right, what's your collateral? All right, how much do we need to go through the process of writing this legal documentation so that if you don't give me back that $5,000 I lent to you, I'll go after the $10,000 of collateral that you put up. Now that takes a lot of transaction costs. That's really complicated to do. And quite frankly, most institutions have figured out, you know what, it's not really worth doing it for a $5,000 loan. So it doesn't get done. And so you have all these businesses who need $5,000, $10,000, $20,000, $30,000 who simply can't get it because the laws of economics or the laws of physics, as I say, don't make sense to give them that.
So a long answer to a very short question, but thank you.
It was a pretty long question, to be fair to him.
I always give long answers, so my apologies.
We're very excited. We're very excited with what you're doing, Jim and Sid. You've got the network in Oonagh. Thank you so much for the background and what's happening as we emerge through these markets. And I do like mangoes very much so, and that frustrates me to hell when I'm back around there looking at products that have shipped from Africa, gone to Europe, and then repackaged, come back, and you've got the whole issue of waste and green and profitability and middle market, and who's actually profiting and who's not, and who's being taken advantage of, and basically those are the farmers on the ground. So we're looking forward towards the time when blockchain more effectively starts to manage this. So that everyone along that supply chain sees a value and benefit from it. So that's really, really important for all of us. There's so much more I'd like to add, but I don't think I can at this point. Except one thing, I read an interesting statistic today that Kenya has probably one of the highest monthly users of WhatsApp to transact businesses. So globally, WhatsApp in Kenya transacts more business there than any other place. So it's interesting to see what the social economic environment is starting to emerge and how it's starting to emerge with people connecting offline, online, and various other methodologies. So having said that, I'd like to thank you, Sid and Jim and Oonagh, for the perspectives.